Hello, Frank. Good to see you. It's been another year where growth stocks, particularly tech, outperforming value stocks, and large caps have outperformed small caps. But diversifying beyond tech stocks is important for the stability of any portfolio. That's what our guest says. Phil McInnis is the chief investment strategist at Avantis Investors. He's got over $40 billion in assets under management in the ETF space. Phil, you heard what I said. Investors seem to only want large cap growth stocks this year. They've been outperforming for a long, long time. You have a large suite of ETFs in value and small cap, international. Given techs outperform for most of the last decade, what is the argument for diversification?
Yeah, absolutely. And Bob, it's great to be here. Thanks for having me. We're always believers in this idea of, look, there's opportunities outside of the largest stocks, outside of the highest quality companies. We want to be, as we're sifting through companies, looking at opportunities, we clearly want to be looking at both sides of the equation. We want to be looking at the profitability of these companies, what they're able to generate, but just as well, we think valuations really matter. The longest data sets we have going back in time, if you kind of look from large caps down into small caps in the U.S., going back all the way to 1973, if we're careful about how we think about valuations across those companies, we see some really attractive opportunities within the small cap value space, the mid cap value space, and even our large cap value strategy. And what you said before around kind of value versus growth, I'm a big believer that a lot of what we see in the marketplace as far as some of those labels, it's actually not telling you enough about the attractiveness of that company. If you look at a lot of the index-based ETFs that are out there in the marketplace, there's massive differences in the definitions of what these value stocks are, what these growth stocks are. The value indexes that you tend to see, they're really overly reliant on some single measure of value, something like just price to book. And we're proponents of, look, you got to look at both sides of the equation if we're going to buy a company here. Right. And so if you look at value through this more complete lens, you can uncover some very attractive opportunities.
So value and small cap have underperformed for over a decade, but I know you've come up with ways to address that. So you're combining value, I see, and small cap metrics with profitability metrics. This is sort of three different, sets here to have a new form of active management. I know you had some success. Is that the idea now? If value doesn't work, value and profitability might work better.
Yeah, I think it is. It's going back to that idea of what value really is, right? And for us, we think about, we're looking at companies that have attractive discount rates, because that discount rate's a pretty good proxy for our expected return. And if you're thinking about doing that at an individual company level, you're absolutely going to consider both sides of the financial equation, right? You're going to consider the cash flows alongside the equity position in the company. That's one of the big differences that we bring to the table if you think about this kind of active component versus a lot of those index-based. But the other thing that's really important is we're doing this on a daily basis, right? We're looking at up-to-date information as we make decisions. We're coming into the end of June. The Russell Index rebalance, something that is always top of mind there. You can't rebalance a portfolio once a year and expect to have the best portfolio all the way through the year.
So I got to get a quick answer here. Is there a reason that value and small caps keep lagging? We hear they outperform over long periods of time. I know some people want to blame passive ETF buyers who keep putting all their money into large cap funds. Can you give me a quick answer? We've been waiting for 15 years for value and small cap to make a comeback, and it really hasn't happened.
So at Avantis, we haven't been around 15 years. Our small value strategy has been around about 5.5. We're coming up, or excuse me, 4.5. We're coming up on 5 years. It has kept up with the S&P 500. So it performs quite differently than the rest of small cap and value. I think that emphasis on quality is super important.
Yeah. All right. We're going to have a lot more coming up on portfolio diversification, on big cap versus small cap, on value versus growth. That's coming up on ETF Edge. That's 1:10 p.m. Eastern Time. Phil will be joined by financial futurist Dave Naudick. That's etfedge.cnbc.com.